Hello, my name's Graham, and welcome to the Tax Shredder podcast, where we turn your tax headaches into millions. In today's podcast, we're going to discuss why filing your tax returns on time will save you hundreds, if not thousands, and protect you from future HMRC tax inquiries and investigations that could turn your life upside down and result in a criminal inquiry. But before we continue, I need to read you a disclaimer. This is general tax info for 24-25, not personalized tax advice. Please consult your accountant or tax pro for HMRC guidelines. Privacy policy in the description. Now let's get rich. In the UK, we have approximately 5.7, almost 6 million people who are subject to self-assessment tax filing. That is, unincorporated businesses, which could be sole traders, freelancers, or partnerships. Not limited liability partnerships. They're a separate, complicated animal. So that's a lot of people. And they're subject to self-assessment. We'll also speak about small companies, what do you call SMEs. There are about 5.5 million of them, and they're subject to corporation tax self-assessment as well as filing to Companies House. So we have a lot to talk about, and we'll try to do it in the shortest possible time in the most simple, easy to understand, and practical way that you can implement into your life. So let's get on with it. All right, let's break this down. What are these 24-25 tax deadlines, and how do they apply to your business? If you are an unincorporated business, it means you're a sole trader, a freelancer, or part of a partnership, not a limited liability partnership. You have to file self-assessment tax returns if you have traded. The tax year runs from 6 April for the 24-25 tax year. It runs from 6 April 2024 to 5th April 2025. That's what they call the tax year. And you have to file your tax return within 9 months of the end of the tax year. In this case, it would be 31st March 20, excuse me. It will be 31st January 2026. We're playing for a lot of dates there. Yeah. So I'll recap that. The tax year for the 24-25, the tax period for the 24-25 tax return is 6 April 2024 to 5th April 2025. The filing deadline is 31st January 2026. That is 9 months between the end of the tax year and the filing deadline. You have these 9 months to file your accounts and tax return with HMRC and pay the tax if there's any tax due above the tax exemption threshold. That is 12,570. But even in that case, you'd have to pay some national insurance. So you still have to file your tax return. If you're not trading, obviously you let HMRC know in time, and you'll not be subject to file a tax return if you have not traded between 6 April 2024 and 5th April 2025. Also, if you have just started trading for the first time, or you haven't traded for a long time, you start again in a new trade, you have to register or re-register with the HMRC by 5th of October 2025. Otherwise, you'll be liable for late penalties and late filing charges. In both cases, if you do not file your tax return by 31st January 2026 for the 24-25 tax year, you will immediately and automatically incur a late filing penalty of £100 plus interest charges on how long you take to file, if you take 4 or 5 months. But also, the longer you take, the higher the penalty rises. And it could rise up to a lot. It could rise up to more than £1,000 if you take an entire year. So, and that has its own dangers with it, as we'll discuss later on. So it could add up to a lot of money. If you are a company, you have to file not only to HMRC, but to Companies House as well. Now, companies are not concerned with the tax year. The tax year is solely for unincorporated businesses, as we discussed, sole traders, freelancers, and partnerships. In those cases, the business is you. There's no difference. You are the business. In the case of small limited companies or limited companies, period, but we specifically talk about small limited companies, private limited companies, you are concerned with the accounting period. That is, the company has a 12-month accounting period. It could be from whatever month you want to whatever month you want. It is by definition a 12-month period, although there are quirks and there are technicalities of when you started and long account periods, short account periods. But these are niche topics. We're just going to concern ourselves with, a simple, practical overview that apply to most people, the vast majority of people who are currently trading as a company. So your company accounting period is 12 months long. It's called an accounting period as opposed to a tax year. Your company is incorporated. That is a separate legal entity as opposed to you. Even though you run the company and you own it, if you're sole director, sole owner, the company is legally separate from you. So it has its own accounting period. And if you get money from it, you will have to, which is not a salary, if you get dividends, etc., you'll have to file your own personal tax return. And these will comply with the rules as we stated for unincorporated businesses. Okay. So the company is concerned with an accounting period which can be from any month to any month. And it has to file to Companies House and then HMRC. To Companies House, it will file within a 9-month period of the end of its accounting period. So, if your accounting period hypothetically ends on 31st March 2025, you will have to file accounts to Companies House by 31st December 2025. You can file anytime within that period. But if you do not file by midnight, 31st December 2025, even 1 second after midnight, you'll incur an automatic £150 penalty. And I've never known Companies House to uphold an appeal against a late filing penalty. I'm sure there are cases that they have, but it's so rare as to discount it. And many people have tried and failed. So, there may be somebody out there listening and say, oh, yeah, I've done it. Well, you would have such exceptional circumstances that it would be truly exceptional and nothing. I would not be something let's say in 99.999% of the time, appeals for late filing against Companies House are rejected. The automatic penalty is £150. And if every month that passes, it rises, goes to, I can't remember over a year how long it will be, but it could easily go close to £1,000. Also, so keep that in mind. Companies House, 9 months from the end of the account period. In this case, 31st December. HMRC is 12 months from the end of the accounting period, which would be 31st March 2026, to file accounts and your tax return. However, to pay your tax liability, if there's a tax liability to be paid, the deadline to pay for HMRC is 9 months and 1 day from the end of the account period. You see the confusion. So that would be 1st of January 2026. So for Companies House, you have 31st December 2025 to file accounts. For HMRC, you have 31st March 2026 to file accounts and the tax return arising from it and your tax calculations. And for HMRC, you got to pay your tax 3 months before the tax return deadline, and that's 1st of January, or almost 3 months, 1 day short. That's 1st of January 2026. You could see the confusion that could arise. So therefore, that is why most accountants, nearly all accountants, say to their clients, look, the tax return ends 31st March 2025. Therefore, we have to file to Companies House and HMRC by 31st December 2025, and also pay the associated tax if due. That simplifies it. I mean, if you've forgotten and for some reason to file your return to HMRC, yeah, you got 3 more months. But to keep life simple and straightforward, let's say for companies, you file within 9 months of the end of the current date and you pay your taxes, Companies House, HMRC. And that's it. But there is another very good reason to file your accounts and pay your tax bill on time, especially to file your accounts and tax returns. Whether you're a sole trader, a freelancer, partnership as an unincorporated with a business as you, or you are a limited company, which is an incorporated business where you and the business separate legal entities, but you run and own the business. And that is because there are many different reasons why HMRC can investigate a business or an individual, and many factors come into play. And sometimes can be quite random, truly quite random, or sometimes because somebody snitched on you for whatever reason out of malice or misunderstandings or just pure jealousy. Or HMRC believes something's been wrong with your filings. It could be a myriad of reasons, or they're particularly focusing on a different sector of business as they do. I think at any one time they focus on 150 different sectors. And say they've had 5,500 new tax investigations this year, they can investigate more sectors. So you're just a random splash, 1 minute is lawyers, and that minute is car washes, you're just a blanket investigation for no apparent reason. But something that factors into individual businesses that they do investigate, quite apart from all these factors, well, 2 other factors. One is the increasing use of HMRC AI to identify anomalies in filings where people's tax returns don't reflect their lifestyle, or companies' filings don't reflect their VAT returns, or now they can go into bank accounts without a legal hindrance that you can see what's in the bank account. So, it's quite easy for them now to see where there are anomalies, and they don't do it as individuals. They do is HMRC AI, this big, massive AI that's analyzing sectors. Is what looks good for a sector, what's an anomaly in the sector. They do all those sophisticated instant analysis, and they send to tax offices, and the tax office look into it at a human level. So, but something that really highlights a business to them that factors into where they might investigate your business is late tax return submissions. That puts a red flag on your business, that highlights your business, that something may be wrong in your business, why you do not file on time. Why is that business not filed on time? Do they not have accurate records? Are they rushing it? They just put anything together. It indicates a lack of organization in the business at the very least, that they may need to help you to organize your business properly. You don't know. And this is the thing. They may think they may be helping and find out they need to carry out an investigation, ends up into a civil, then a criminal investigation. And then they could go back 20 years, layer it, like peeling an onion. And they're allowed to go back 20 years into your life. And even if you run a limited company, don't think that protects you. There's this fallacy that if you run a limited company, you're protected. Well, no, you're not. It is true, it's easier if you're unincorporated, a sole trader, you are the business. So the business, something wrong with the business, it's you. But as a limited company, it's well known now that HMRC starts with the limited companies. They have these groups where you have one person from VAT, one person from corporation tax, one person from income tax. All groups sit together, and that person finds fault with that account. After they finish, they pass it to corporation tax and they pass it to income tax. So if there's a problem with your corporation tax, chances are there's a problem with your income tax, right? On the balance of probability. So what they do, they look at your business bank account and suddenly, they find transaction from your business paying your personal accounts, your brother, your sister, your mother, your father. I say, oh, why is that money going there? Let's track down that money there. So in effect, they have managed to get around the veil of incorporation and they're into your personal affairs. And they could end up investigating you on a personal level if that mortgage you took out, that deposit for that mortgage you took out cannot be justified. You bought £1 million house and you showed 80,000, 70,000, 50,000 a year as a salary. Well, where did you get a £400,000 deposit? So, all these things factor in. So don't think you're safe. So this is a very important factor that people don't speak about. Okay, let's go on. But do not despair. I will give you free, fully compliant, no BS hacks to shred your tax stress and stack millions in 24-25. All HMRC approved, perfect for sole traders and SMEs. These are not gray area sort of things. So even HMRC, even if you're listening to it, you'll approve of what I'm saying because I'm trying to get people to do their taxes right and optimize their tax situation. So it makes life easier for you and makes life easier for them. Let's go on. If you're a sole trader, make full use of claiming all your allowable business expenses. Now, they're the standard ones like laptop, office, travel, phone. Claim all legitimate. Do not try to claim expenses that are not business expenses because HMRC AI is increasingly able to identify those situations and you don't want a necessary investigation. There are expenses, some of them part business, part personal, and you have to know how to identify and do the apportionment. I would strongly recommend you get an accountant unless you're the most simple business in the world and you want to claim minimum expenses and you don't care. But an accountant would be worth their weight in gold in identifying which expenses you should claim, how to optimize them, and partial expenses, what's the best allocation to keep you safe, and which expenses you're not yet identifying that are perfectly allowable business expenses, and which expenses you should not try to claim, right? This is very important. And you may find you end up paying less tax, but in a safer way. But in any case, it will keep you safe. So a good accountant will worth their weight in gold, right? Do not go to an accountant and tell them, I don't want to pay any tax. That's not the way. If you go to an accountant that's not proper, yes, that's an important point. Only use accountants that are properly regulated. That means ICAW, ACCA, ICAS, accounting bodies that have royal charter, that have standing, that license their members, that regulate the members, that monitor their members. Proper accountancy bodies where its members have something to lose if they practice accountancy in a dishonorable manner. You do not want to go to somebody who has nothing to lose that HMRC cannot touch, that have no regulation, that pay no licenses. They don't care. They'll give you what you want, but you'll end up in trouble and they'll walk away. Okay? So you need to be careful of who you choose and do not just choose people based on giving the cheapest price. I mean, you pay peanuts, you get monkeys, right? If you get someone to give you what you want them to give you because you want it, then why don't you just do your own accounts? Because, they'll give you what they want to give you. They're not licensed. They're not regulated. They don't care. You get into trouble. They don't care. They've got their money, and you're the one holding the bag. Okay? So, and also, you need to ensure that the accountant that you're using, even though they're from a regulated body like ICAW, ACCA, ICAS, that they have a practicing certificate. If it's not your brother, your sister, your friend that's doing it for free, which is fine. As long as they're qualified, as long as they're a member, that's fine. But if you're paying them, you need to ensure they're properly licensed by the regulatory body. They have a proper practicing certificate. That is very important, okay? Do not go to unlicensed practitioners, especially those that just decide to put up a shingle completely unregulated, haven't done the appropriate studies, have done the appropriate training, and when things go wrong, they can just walk away without a care in the world. They'll give you what you want, but sometimes what you want is not what you need. And that's a fact. Okay, so that's the first one. Hack one, max out allowable expenses if you're a sole trader. Hack two, try to file early to stay liquid. I'm going to read this out to you because I wrote it and I don't want to forget what I wrote. And I want to be quite precise. So if you don't mind, I'll read it. If you use an accountant, it's important that he or she keeps up to date with what is happening in your account on a monthly or quarterly basis, even if you're not VAT registered. And this is especially for non-VAT registered traders. If you're VAT registered, your accountant should be keeping up to date with your accounts because they file quarterly VAT returns, right? So that shouldn't be an issue, okay? But if you're not VAT registered, please listen very carefully. And even if you're VAT registered, there's some points that will apply to you here, some very important points. Do not leave it to the year-end rush, where he will have bottlenecks. If you leave it to year-end rush, there's no question, unless you're the only client that accountant has, he will have bottlenecks. Because for an unincorporated trader, the deadline is the same for everybody. All right? He will have bottlenecks on his side, and he'll be unfamiliar with what has been going on in your account. He'll be reacting. It doesn't matter if it's your account for 20 years. The fact is, in one particular year, say 24, 25, you may have changed things around. You thought you're doing the right thing, and you weren't. And he wouldn't be aware until he's doing the accounts. It's too late by then. Not to mention not be able to advise you on your financial issues in the way that you're managing your business account, your business bank account, etc. The risk is that deadlines are forgotten, work is rushed, corners are cut, resulting in inaccurate filings and potential penalties, not to mention inquiries into your tax affairs by HMRC, eventual inquiries. What I generally ask clients to provide income and expense receipts on a monthly basis so that the account is updated in real time. This results in the client's draft accounts, tax returns, and calculations being ready within 2 to 3 months of the year end so that they can know their tax liability and plan to pay it without the stress of trying to raise the cash and pay the bill at the very last minute. I've known many cases where that has happened, which is bad for everybody. What I also advise is for clients to put aside at least 10% of their monthly revenues so that when it comes to pay the tax bill, that cash is in, that they have that cash on hand. They're not scrambling around for the cash. They don't have that stress, thus avoiding the stress that so many people experience when that tax bill becomes due, right? So that's hack two, early filing to stay liquid. Hack three, and this is particularly focused on small limited companies, period, but we're talking about SMEs. Align SME accounting periods. We spoke about it, we alluded to it earlier in a certain respect. Okay, there are tax years for unincorporated businesses, sole traders, freelancers, partnerships. As we mentioned earlier, limited companies deal with accounting periods, but there's also fiscal years. Fiscal years where the government gives its budget for, where it sets tax rates for, and this is for 1st April of one year to 31st March of another year. In the case of 24-25, it's 1st April 2024 to 31st March 2025, where it sets the tax rate for that entire year. Can you imagine if your accounting period is the calendar year, that's from 1st January to 31st December, and the government, which it has very often in the last decade, changed the tax rates for companies from one fiscal year to another? 3 of your months from January to March will be one tax rate. 9 months will be another tax rate. Now that creates immense complexity. All right, the accountant has software you can automatically calculate. It's not a manual calculation. But even for you, as your businessman calculating in your head to see, what's my tax bill going to be, as business people do, it's going to be quite complex. You'll get it wrong. And the reason why this is important, for tax planning purposes, for a profit extraction, how much profit are you going to take out? How much tax are you going to pay? You have your life to lead. When are you going to sell your assets? We're talking about capital allowances, balancing charges, all those things, buying and selling assets, allocating losses to accounting periods. As I said before, profit extraction, all those planning come into play, the more profit that you make. And it could make tens of thousands of pounds in difference for a very average sized company. Whereas if your accounting period and the fiscal year are one and the same, it's just one tax rate. It makes planning very easy. Many people, they have friends doing their accounts, when I say friends, small accountants. And these people, they're not the best at tax planning because you don't get many tax planning. So people just want them to file, their accounts. When your account period straddle fiscal years where tax rates change, they may be missing opportunities to maximize your tax situation. And that could put you at a great disadvantage financially. And they will not know, you will not know. Well, why? You might eventually have to change accountants when you find out so-and-so is making so much money. And why is that? Well, the accounting period is aligned. Their life is simpler. And all this could be avoided if the account period is aligned with the fiscal year. And that could very easily be done by any accountant. I wouldn't advise you to do it. That's something a professional should be doing. So that could save your life or your financial, well-being. I have a use case for you, an example to help you understand this concept. Nia is a tech startup owner in Cardiff. She aligns her year end to 31st March 2026, for example. This simplifies her corporation tax filing because she's dealing with one tax rate, saving her, say, £2,000 in admin fees, tax planning, ensuring that she can run the business, have enough cash flow to the business, minimize the tax, and have enough to live on. So this is very important for limited companies. Let's move on. Tech is your secret weapon for crushing in 24/20. As I always say, we're in the technological age, we're in the AI age. There are big advantages to using it in the context of tax, business, record keeping, optimizing the situation. The 3 accounting packages and booking that I recommend are Free Agent, QuickBooks, and what I use, Capium, because it's a whole CRM system that includes, you do everything in one system. The company and the individual, taxes, accounts, bookkeeping, payroll, the whole thing is in one. So it makes it easy. I don't have to use different systems. But as an individual, your situation might be different. And you could use QuickBooks, Free Agent, whatever. If you're trading in crypto, you're a crypto user, I strongly advise you to use Coinly or CoinTracker, simply because the tax rules for capital gains for crypto is quite complex. Capital gains at the best of time is complex, but particularly for crypto, where you have to do same-day rule allocations or 30-day, bed and breakfast in, is not something that many accountants deal with on a daily basis. And therefore, these software are approved by HMRC. All you do, you connect your wallet, you connect these apps, these blockchain fintech apps to the exchanges that you use. And that's it. You sit back, they do all the work, they identify charitable events, they do the calculations, you can give to your accountant as a report for them to file to your other source of income, or you could file straight to HMRC. You don't have to know the rules in order to use these software. They'll do it for you automatically. So you become a genius by using those rules, something that many accountants on their own would find difficulty in doing. So yeah, that's your real secret to getting it right, especially if you're in crypto, these blockchain tools. So finally, in conclusion, let's wrap this up, tax shredder fan. The 24-25 deadlines are your shot to shine. Crush self-assessment by 31st January 2026. File your SME accounts early and use AI tech to stay ahead of the pack. Finally, please subscribe to our Tax Shredder weekly newsletter. It will really help me out. It's free. It's completely free. It's free for life. You don't have to pay a word. You have to pay nothing. But I can give you some real advice, and I'd really appreciate if you could subscribe to our Tax Shredder weekly newsletter for exclusive tips, not just for 2025, but for all time. Email taxshredder@taxshredder.co.uk for a free consultation, and the link is in the description. And smash that like button, please. Share with your hustle squad, and let's stack some cash in 24-25. Thank you very much, and have a lovely day.